Welcome back everybody into another weekly recap, the week from the 8th till the 12th of November. We're going to look at gold, Bitcoin, GJ, and some macro aspect, really just a tip of it, looking at dollar index and bonds. As a starter, we know that this week was the main concern of the week was the producer price index of the USD on Tuesday, and of course the CPI year over year on Wednesday as well for the USA. We also had some GDP and other economic reports for the GBP, so the GDP gross domestic product for the pound, Great Britain pound, and this was the main focus of the week. So let's start with gold. As you can see already from the graph, we were already in a bullish trend coming from the previous week with the NFP, and we were just continuing buys above PSAs. As you can see, previous highs, multiple failure to break, multiple attempts, but then closing above, and then right before the day before the CPI, just of course pretty much expected order block here. And when the CPI came out at 6.2, which is well above the previous data, well above even historical data, investors pulled out the money as they've been doing for the last few weeks since the tapering was announced. They pulled out even more money from the US dollar, from the bonds, we're going to see later on, from other assets to pull it in gold. And the reason why is that gold reacts really well, is highly correlated to the real interest rates, and we're going to see it later. After, of course, we see a 50% correction, and after that just continuous bullish action, almost to revisit the same highs. And as you can see, we closed this week on Friday, tapping again those previous highs after an expected sell-off, and then liquidity grab to continue and try to break up, possibly next week to break above 1870 if the sentiment continues. As you can see, we can identify two different main areas, the one below 1836 right before the CPI, and this 1844 M plus, which was a strong support, strong demand area, and where price bounced many times. Okay, so we're going to have a look at the of course the dollar index. This one is the hourly chart. Let's go on the 1 minute, on the 5 minute, to sort of replicate what we saw on gold. And as you can see, this inflation data was not bad for the US dollar, so I got to correct. Investors were not pulling the money out of the dollar, but out of the bonds and other assets, other indices, and other instruments. Because as you can see, on the day of the inflation, after that, gold spiked up above $95. If you recall it, this was huge. It was very difficult for the dollar to break above these previous highs, attempted multiple times, and now with the good high inflation data, it actually managed to break above. As you can see, if we look at a glance at the government bonds very short term, the yield, we see that this week price spiked up. The same on the other short-term bond, the 5-year yield spiked up. 2 years back down, 5 years back down. And this means that investors are not optimistic on the short term, 2-5 years. Let's go also on the 10 years, as you can see, bullish move. Remember that the actual value of the bond is inversely correlated to the yield. So if the investors sell the bond, the yield will go up. And why the investor should sell the bond of the, look here, during the pandemic? They bought the bonds and the yield decreased. Now it's the opposite. So now the yield are increasing because investors are pulling out money from the short-term bonds. 2, 5, and 10 years, all going up. As you can see, on the 20 years treasury bonds, it was a decrease. So this is the ETF that represents it, and as well the US 30 sort of weak. You see the longer distances are more indecisive. The yield is still increasing, means that it was there was a sell-off as well. Let's see when we saw the biggest moves. Oh, as you can see, were exactly on the inflation day. But let's go on Bitcoin. Bitcoin as well, during the inflation, showed the same characteristics of the of gold, of physical gold. And as you can see here, we started the week on Sunday Asian session, the start of the week very strong. We went to make a new all-time high. We did a sort of 50% correction. We found support at 66,400 and made on Wednesday, exactly the inflation day, CPI day, a new high. But what happens when Bitcoin makes a new all-time high is exactly this. We see a huge correction, and the same in the matter of 3-4 hours. Price drop 500 pips to find again support, demand areas at 60k area. So now we're at 62k area, and okay, after that just order block, first bounce, order block, another bounce, and another order block being created. So of course you see the moves on a Bitcoin. After strong upside moves, we can expect strong downside moves, and to go and revisit some liquidity areas that we have already identified on the markets. As you can see here, these price points were already known because in the previous weeks they played out a lot. Very huge correction after printing again another all-time high. On GJ, not the cleanest price action. As you can, if you remember, let me delete this. If you remember last week, we have been in this order block between around the 52,800 and around the 53,600, and this week we played this order block very well. We identified the top of the order block and played these corrections. We identified these double top at 153 and the break retest for closing below the bottom of the order block. So also we identified, I think it was here, the double bottom at around the 52,800 with a double bottom failing to close below the level. But as you can see, we are in another block and then just and closing off the week with some uncertainty over the strength between GBP and the yen. So nothing else, nothing more to say about it. If we want to just have a glimpse at next week, we have the retail sales, some Fed speakers on Tuesday, CPI for the UK, PPI for the UK, the year-over-year for the UK, some housing figures, some more Fed speakers. So we have to be very much aware of all these. Wednesday, it's look at this, all day Fed speakers, CPI of the Eurozone, if you trade Euro USD, jobless claims, not really that much relevant, retail sales for the UK, and that's it. Nothing else next week. So this is it, guys, for the weekly recap on the main pairs we trade and we look at every day. See you guys next time.